Hi everyone. Today my group and I will be presenting on what is strategic management accounting. My group mates are Dexter, Chong, Zhe, and Carol. After analyzing the article by Sean Stein Smith on what is strategic management accounting, this is how our flow of presentation will go. We will start with a brief introduction, followed by areas of discussion, which leads to the arguments, interpretations, implications, and lastly, the conclusion. So, this presentation will mainly discuss about strategic management accounting and how big of a role it plays in organizations. This is especially so given the fast-paced era of digitalization and technology that we live in. We will dissect how we can leverage on strategic tools to support our organizational structure, as well as understanding the relationship between strategic management accounting and integrated reporting. Understanding how we can connect the dots between SME and marketing to up the role of management accounting function is also something that we will touch on. Furthermore, it is important to also bring to light the pivotal role that strategic management accounting can offer to organizations. SMA mainly helps firms to be much more organized in a way that they process information, helps to consolidate and merge with current available data, and lastly, breaking down all of these data in a layman manner. And since SME and integrated reporting are the main topics today, we will also touch on what about these two aspects is crucial to them. So, to kickstart, moving on to areas of discussion. I will now proceed on with the discussion of SME and IR. So, the increasing digitization of the global economy has influenced virtually every type of organization, and business leaders are now expected to be well versed in the different types of information produced and collected by their organizations. Organizations who is able to fully make use of the information obtained are most likely to succeed. Data and insights that can and should be generated from the data obtained by the organization are what enables senior decision makers to make the right decisions and choices for the organization to move forward. However, its strategy, which is an qualitative action, are heavily dependent on historical and qualitative data. There are three major areas to be considered in order to develop and execute cohesive organizational strategy. Firstly, the data must be generated consistently and reported in a format that is understandable and useful to the end users. Secondly, the financial implications of non-financial data, such as information related to environmental compliance, government metrics, and broader changes in the business landscape must be clear and communicated throughout the organization. Lastly, is such that such information must be incorporated into any discussions or plans related to strategic initiatives, plans, or expenditures. Better information and understandable information are the major points towards effective decision making.
Corporate governance and sustainability is crucial to improving reporting and disclosures to internal and external shareholders. Back in 2013, Yahoo embarked on a string of high-profile acquisitions and personnel hiring that led to increased analysis as core operations continued to decelerate and eventually became stagnant in 2014 and 2015. The increased analysis combined with a lack of management strategy and narrative led to a depressed valuation of the organization's shares, which have demonstrated the importance of corporate governance within the company. Corporate governance represents how organizations interact with both internal and external decision makers. By communicating information clearly and consistently with stakeholders, represents an area of competitive advantage in a business environment increasingly focused on information and real-time communication. Although they have implemented the structure of SMA, the improved accounting and management of corporate governance process was unable to solve the issues within Yahoo. It is crucial for management accountants to think critically to develop strategies to enhance business decision-making by combining both factors of qualitative and quantitative data, as well as communication of relevant information. With ongoing discussions circulating corporate governance, it will increase the need of government's information. As a result, besides the additional regulation and informational requirements, the concept and implementations of corporate governance for management teams have increasingly become complex. Eventually, the issues existed in Yahoo, such as business overseas and the strategic planning of the organization, will be resolved, as this provides an opportunity for the accountants to think creatively about how to leverage existing skill sets to better develop the governance process to the company's benefit. Many of the same challenges associated with reporting and assurance standards are very similar to the challenges that non-traditional areas face, such as corporate governance, sustainability, and risk management practices. Many organizations have focused on sustainability accounting, as consistency is a raising important factor to the organization. Most companies have faced challenges due to the lack of sustainability reporting standards. In the article, it is stated that setting up such standards would encourage adopting sustainability report standards. This is also a crucial area of concern for educators and future members of the accounting professional, as they may fail to recognize the full potential of SMA. Therefore, it is important for accounting professionals to enhance their existing skills with the new Sustainability Accounting Standards of Sustainability Accounting Standards Board, SASB, that is quantitative driven and its assurance standards. This will increase the development of the sustainability accounting reports, which will assist in decision-making process. With more sustainability reports produced, there will be more quantitative data available for research. With more research ongoing, accounting professionals will be able to analyze cost-benefit ramifications for sustainability-oriented projects. On a holistic point of view, regardless whether the organization is managed for profit or non-profit, they have a common objective, which is to produce more resources than are consumed via ongoing operations. Theory and theoretical constructs are a more important factor in decision-making process, but the idea and concepts discussed should also be adding value to the organization. As business landscape continues to evolve, it is crucial that accounting professionals understand the differences between short-term interests of the market and more substantive shifts in how organizations conduct and report operations. If the data and information produced to address the needs of the organization are not user-friendly or meaningful to end users, the impact of the reports and information will be diluted. Therefore, it is important that quality financial data are available for the production of quality reports. As such, the end users of data should be priority, with the accounting function evolving and developing on a regular basis. Integrated reporting combined with the emerging trends toward a more strategic role for the accounting profession lays the broad groundwork and foundation for such data distribution. Areas that stood out as particularly applicable to the changing nature of the accounting profession, including integrated financial reporting, corporate governance, sustainability, stakeholder-oriented reporting at large, and the increased prominence of SMA. SMA is caused by the transition and evaluation of financial reporting from backward and is historically focused information to a forward-looking analysis of ongoing performance.
Thank you, Carol. So coming to the implications to strategic accounting, in the integrated financial reporting, there is a broader and more interconnected view of how information how information connects to business performance, ultimately giving it a better perspective to its organization's costs and benefits. It also brings the organization to have a more forward-oriented perspective and causing it to be more nimble. So with both of these, it results in the organization to make more informed business decision making to increase its benefits and values for both its internal and external stakeholders. It also helps to plan and envision for the future as is forward-oriented. Moreover, the organization are right now also more proactive towards new opportunities and challenges. And so this helps the organization and cause them to be more preemptive to possible challenges that the organization might face and dealing with all these challenges. Coming to strategic management accounting, we can look into developing and executing a cohesive organization strategy. Also, it has this implication of information incorporated into discussion or plans related to strategic initiatives, plans, or expenditures. Lastly, it also has this implication from financial reporting to analysis to predictive analytic and forecasting information. All of this results in having the organization to be more strategic in accounting and management accounting, utilizing management accounting tools in a more strategic context. Coming to the implications of to accountants, firstly, with the integrated financial reporting, right now accountants need to utilize public accountants and internal accounting function in a more strategic manner. This also helps to involve and change into a role, change the role of the accountant to similar to a strategic partner. So every accountant is now having the burden, yet also the importance of thinking and having the perspective of a strategic partner, moving the organization with a strategy. In the strategic management accounting, the accountants also learn to think and behave in a more comprehensive and strategic manner. It also helps in holding a predictive analysis and forecasting information for business decision makers. Lastly, it also trains and implements new systems. All this results in how the accountants now have to not just do its role in the day-to-day accounting basis, but also plan and think about its strategic role and the strategic analysis, implementing also its strategy so that the organization can continue to have its competitive advantage and sustainability in the market.
So we're talking about guidelines to implementation of SMA. So basically, the few principles will be to link strategy, operations, and report, which is disseminated to end users by producing the breadth of information and distributing it to appropriate venues for each stakeholders. Then connecting information with front and back end, meaning organizations which have vast quantity of data must be able to integrate and efficiently look into business insights from this information, differentiating what should comes from the front line and what is supposed to go to the back line. Next is understanding what integrated reporting represents. So if stakeholders request additional information analytics on sustainability or governance, and IR initiative will provide opportunity to proactively develop such areas. Next, we'll be focusing on what the information illustrates. Reporting, regardless of what form, financial or non-financial, is a business necessity, but this does not mean it should only be treated as expenses. So if management are able to leverage on this information, they will be able to look into insights and business actions to further their strategy. Next is looking forward. So to look forward into risk management and supply chain operations, and also the needs of stakeholders. So these stakeholders will include your customers and provides a roadmap for decision making moving forward. And management should be able to actively use this map to plan their strategic actions. So to conclude, SMA is actually essential to provide both qualitative and quantitative data. It's essential to evaluate organizational performance and address various stakeholders' reporting demands. So it also utilizes multiple capital models, and its rose to prominence is due to the rise of non-traditional reporting such as IR. Next, the value of information does not always translate into profit-making information. So we should look away from value as only money for organization, but rather take a more holistic approach whereby it can include things like corporate social responsibilities, customers satisfaction, among many other things. So stakeholders landscape, whereby SMA serves as a method to address complicated environments and provides a framework for higher level of strategic decision making. So it allows for more accountability and satisfies the needs for both traditional and non-traditional stakeholders. So merging IRA and SMA is a way that these objectives can be maximized, and for it to be strategic to an organization needs to be creative, yet coupled with management accounting functions. So the assurance and attestation of IRA can be improved on, and this can only be done by a system that extracts the main point of both qualitative and quantitative analysis and disseminates these informations across the board. So we have come to the end of our presentation. Thank you for your time, and we'll be opening the floor for any questions.